Derek, welcome. Has the recent uncertainty changed what investors are looking for when it comes to tech?
Yeah, significantly, yes. And really what's happened over the last, say, year and a half is that, growth at all cost as a concept has kind of, I don't want to say died, maybe hasn't gone completely, but it's certainly been deprecated. And what we see investors saying is essentially, we want to see growth, but we want to see profitable growth. And when we looked at different types of companies and their different performance, what we've seen is that companies that maybe aren't growing as fast but are profitable are getting a stronger valuation, in fact, than some that are growing fast but are just not profitable.
Are tech companies themselves changing their approach to growth?
Well, they are. I mean, they're having to adapt a lot of their business to deal with this new reality. Now, it's come in different forms. Some, faster growing companies that are private capital funded or not public, they've essentially had to extend their runway. So they haven't always had access to capital like they've had in the past. What that resulted in is, frankly, just like simple cost cutting, not necessarily changing how they approach growth, but just reducing their burn rate. The savvier companies are those that are thinking differently about product market fit, about how to go to market, and improving the essentially the effectiveness or productivity of their sales and their business overall.
What are some of the challenges that SaaS companies are facing when pivoting to profitability?
I sort of think there's a couple of steps, tied into what I just mentioned. What we see is the first step is just increase the burn rate, reduce the cost. That doesn't generally make for a better company. It makes for a company that can survive a little longer. And then the companies that really figure this out and embrace the sort of new reality, they're thinking differently about the product lineup that they have, cutting products or sort of experiments that just don't have product market fit earlier so that they can reallocate those engineering resources to the products that are going to be successful, or just bank the savings. There's a similar thing in the go-to-market, which is really focusing on the ideal customer profile, and cutting out, frankly, like the bad customers that are not really the right customers for the business. And then there's, usual good hygiene around the organization and making sure that the G&A teams are lean and really focused on what's needed for the business to perform.
Derek, thank you so much.
You bet.